Good morning. It's Friday, June 6th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So a recap of yesterday's trading action because it was impacting most markets here. We saw stock futures rally on signs of progress towards better U.S.-China trade relations. President Xi Jinping and Donald Trump had a phone call and also started paving the way for better relations going forward. So it was really a risk-on environment in the markets. We saw some of the safety plays really lose some of their momentum. But then Elon Musk and U.S. President Donald Trump engaged in a public feud, with Musk calling for Trump's impeachment and Trump threatening to cut off Musk's government contracts. So we saw Tesla stock fall about 14% at one point in time. So the question is really what's more important, relations between the U.S. and China or Trump and Elon Musk? Because I really believe as a commodities trader that U.S.-China trade relations is much more important. But however, the market, the headlines, the media, and everything else was really going with the secondary event that occurred, and that was what was driving prices lower. Now, we did see Bitcoin futures sell off a bit here yesterday, testing that key support right at around $101,000. And what it was really kind of a rotation into that new IPO that came out, and people were playing that as more of a proxy rather than Bitcoin itself. It was that Circle IPO. Now we're seeing prices here recover with U.S. equities, and then also we're seeing the dollar index up a bit here with gold futures up about $7, but you do have the silver market up about 1.5%, trading at $36.35 after hitting a high in the overnight of $36.43. So now you look overnight here, we've got stock futures, they are headed higher, but little conviction here as traders are bracing for Friday's main event, the pivotal payroll report that's likely to set the direction of travel for U.S. equities and most of the markets here going forward. So this is a really big number at 7:30. So if you've never watched payroll data here, this is kind of the main event. When I started in this business about 25 years ago, I was not even allowed to take off a payroll day. I'd have to come in, I could stay for the number, and then I had to leave depending on what the result of the number was. Now, if you look at some of the analysis here, we've got about a 90% chance that we fall between that 100,000 mark and about 170,000. So anywhere in that range here should be quite supportive here for the markets. Now, anything below 100,000 or above that 170,000 could really send these markets into a worry and tailspin. The reason why this number is so important is because, one, it should have a meaningful impact on these recession probabilities. So if you see all of a sudden a big negative number, then those recession probabilities are going to be pulled forward dramatically. If you see a number where it comes in significantly higher than expected, you're going to see that, hey, these tariffs and these problems that we've had over the recent past are not impacting the labor market whatsoever, and that there's nothing to worry about. And that's where U.S. equities could really break out and press up on all to the highs here. So it's quite a coin toss with about a 40% chance we come in between about the 110,000 on up to about the 135,000. Anything above that's about a 20% chance we go from 140 to 170, and obviously 100 to 115. So that's kind of more your Goldilocks print, in my opinion, is that we come in near the expectations, we see little wage growth, and then we also see that unemployment rate start to level out. Now, looking at these other outside markets here, silver and platinum, with prices reaching 13-year highs, and it's the highest since early 2022, driven by a growing investor appetite and improving fundamentals. So it's really been silver and platinum that are driving the rally right now in the metals complex. So the metals are being aided by technical momentum, so you got a breakout on the charts. If you get the chart pack, platinum futures, they bounced off that key support. They've gone back up to long-term resistance. You look at the silver market, another one where it broke out to the upside. So what you do is you look at those old resistance numbers and you look at those as key levels of support. So you got silver and platinum with gains of about 25%, 28% here year to date, and both markets are heading for deficits this year following several years where kind of the demand had outstripped that supply. So platinum is one of the more sensitive metals here, with much of the platinum coming out of Africa, and you've got rolling blackouts, you've got all kinds of problems going on with those mines. You've also got copper mines coming offline here. And remember that silver is often a byproduct of copper mining. So you're seeing that platinum ETF holdings, they are showing signs of picking up. We're seeing open interest on the futures contracts drive up here quite a bit. You've got it's expanding about 3% since mid-May, and inflows into silverback ETFs, those continue to grow since early February with holdings up about 8%. So you look at the exchange traded funds, they cut about 93,000 troy ounces of gold holdings yesterday, and then they added 5.29 million ounces of silver holdings in the previous trading session. So you look at silver, you get the breakout, you get the one-day sell-off here because traders book profits and things like that, and then you get the explosion to the upside as new ETF flows come in. So year-to-date percentage change, you got gold up 6.7%, you got silver up 4.3%. That's the largest increase year-to-date. So the question is, and this is the question I ask myself, not looking for a response from the public, but I'll ask myself, like looking at copper down about 1%, 488, down 540 on the day, can silver hold if copper declines, and also if gold declines? So if you see a risk on rally in the US equity markets, chances are you'll see gold futures continue to sell off, and you'll see what is the spillover effect on some of these other base metals. So I'm looking at, time will tell really on this particular play and how it's going to develop. On the outside markets, you do have the dollar index a bit firmer. You have the euro currency where the European Union signaled that they're most likely done with their interest rate cuts. So was that potentially the top for the euro currency? Was that the top for the gold market here yesterday? Not picking a top or picking a bottom. I'm not a proctologist, but we'll look at these markets here, look at the technical developments. So I'll update the chart pack. We'll send that out here today. We're gonna send out some research over the weekend as well. Be sure to register for that in the link below. And then looking at these other markets here, it's just gonna be the 730 number that comes out should drive the direction. And we should also see a de-escalation of tensions between US President Trump and Tesla CEO Elon Musk. And one other thing is that every time I mention Trump in this video, that analytics from like Google and other sources where we post this video, they suppress the video here because they believe that it's an endorsement rather than just a reflection of what the news flow is in these markets. So your key levels here on the S&P, about 5,900 to 5,903. That key resistance going to be 6,000 to about 6,006. So we'll continue to monitor that. And then one other chart to throw up and to look at the Russell and look at this inverted head and shoulders pattern that we have that looks like it could be breaking out to the upside here. So if you guys got any questions, shoot an email to info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading, go get them.